After over 5 years of following the stock market, this habit single-handedly is a massive contributor, in my opinion, to why so many people never can make it to that next phase of actually being profitable consistently and think that they can just play the game of the markets, which ultimately ends up humbling them very quickly. Now, this recently was brought up on a live stream and in my own personal life. Two recent instances where in the moment of the conversation, I took a step back and was like, wait a second. There's a flawed piece of logic here, and I want to get into that. All right, so picture this scenario. You are pulling up to the cafeteria at work or wherever, right? And someone talks to you and they're like, hey, you know that Fed, right? Oh, Powell and the Fed, man, those rates, they're staying higher for longer. And that's been the theme. When I'm filming this video, that's kind of been the theme of what's been going on right now. So you're talking to someone, you somehow get into the financial world, you get into the Fed and Powell, because it relates to a lot of things, right? Home prices, interest rates, right? A lot, you can say, hey, I'm getting a pretty good interest rate over here in a high interest savings. Oh man, I just got a mortgage and I'm paying 8%. Or, these are everyday conversations that come up all the time. But this guy comes over and it's like, yeah, it doesn't sound like we're getting cuts anytime soon. Higher for longer. Inflation's not going away. You go some back and forth. It just so happens that tomorrow is CPI. CPI comes out pretty much where expectations were. And the next day you talk to that same guy, but the market's gone crazy. The market's rocketing up. The stock market's going up higher. And it's like, oh man, it's a little bit of a surprise, right? To be honest, it was a surprise. No one really thought that was going to happen with CPI, unless CPI came in way lower than expectations, but it came in right where we were expecting, and the market went up way more. But that same guy says to you, yeah, this market's out over its skis. There's no way it's going to hold up. I think we're going to see a nice downside move. Whether they actually actively short it or not, whether they say that they're definitely not buying in here, whether they say that they're getting in some put options, like if you hear somebody like outside of like the YouTube financial space or Twitter or social media where like we are like you go to that type of content, when you hear somebody like I cringe, I just cringe when I hear somebody say put options or call options, especially when they say it that way and they don't say just options, they say put options or call options. It's like, oh God, I don't want to hear it unless like I know this person knows. And by saying that, I know they don't know because their terminology just a little bit off. It's not wrong, but it's just weird. No one says that in our world. We say, yeah, I bought some puts, I bought some calls. They don't say put options. I'm going to buy some put options. I'm going to buy some call options. I mean, it is perfectly right to say that, but it's like, we don't say that. Either way, this logic is flawed as a trader. Trader, trader. This logic is flawed. Why is that the case? There's a couple reasons. As a trader, we do not need to know what is going to happen next to make money. That comes straight from Mark Douglas and a lot of trading psychology we've talked about. If you want to learn more, we have a video, I believe, Trading Psychology by Mark Douglas in less than 10 minutes, where I summarize the major points in my own words of what that is all about. But if we act in the way that we know that a good CPI means, or a CPI of this nature means market goes up, or a CPI of this nature means markets go down, if we act as if that's the case, we are setting ourselves up for failure because, again, we can't control it. And and there's so many examples. I can almost guarantee you in the past couple of weeks, you can go back to a specific time where something happened, a piece of news happened, whether it was for an individual stock, an overall market, for oil, whatever, that didn't quite make sense with the reaction that we had based off of price. So, for example, we had CPI that came in maybe right where we were expecting it, and you would think, oh, the market's not going to react very much, but the market went up huge. Or CPI came in below expectations, and the market went down a ton. So, one would think, based off of prior events, that that's probably not what's going to happen, but we can't control it, and there's absolutely no way to know. So what is a better way to view this? View news and view releases like this as simply a catalyst. Nothing more, nothing less. There's absolutely no reason to try to put more weight behind this or this or this or that, because there will be times of the year where CPI is very sensitive. There'll be times of the year where everyone's paying attention to Powell. There'll be times everyone's paying attention to the election. There'll be times everyone's paying attention to earnings. And there'll be times where those same catalysts don't give you the same reaction. They don't seem to elicit much of a reaction at all in the market, or they give the opposite of what you would expect based on what the news or catalyst said when it was released. So it just doesn't matter. It really doesn't matter. All that matters is that you know, hey, there is a catalyst coming. I'm not going to try as a trader to say, well, if earnings does this, then we're going to go up. So, because what ends up happening is CPI comes out or earnings comes out and it falls in line with your thesis to being bullish or bearish. And so let's say bullish. You make a bullish bet, or the opposite happens. And initially, right, then you get price action going up, then it comes right back down. But now it starts coming down pretty hard, and you're like, no, that news, that catalyst was really good. It's very bullish based on my calculations, based on my, whatever, which is also bullshit. But based off my math, my calculations, it was bullish. So I'm going to buy the dip. And now you buy the dip, and now all of a sudden the dip keeps dipping, and it's an absolute destruction of your position. That is what you want to be avoiding when it comes down to it. The news does not need to make sense based on how the market reacts. The news is the news. You are supposed to react to how price reacts, knowing that these news catalysts are going to move price and could move price aggressively. How it moves price, I don't care. It'll move it up or down. Then I make a determination based off my systems and strategies to trade it if I want to trade it or not. Simple as that. Don't get caught up in trying to pinpoint what this means and think too deep about things. You don't need to know, or you don't need to think to be able to make money about where we're going to go next. Just simply play a pattern, play a strategy. If you win half the time, but you have a bigger winner than loser on average, you're going to make money. That's all it is. Hope this was helpful. I'll leave a link down below at Interactive Brokers if you guys are looking for a new broker to sign up with. Outside of that, there are a bunch of other links and resources down below. Thanks so much for watching. Peace.